Alright, hello everyone, and welcome back to Daily Update of my 1000 Days Challenge. This is day 281, so let's get started. So as you understand, today I'm still under quarantine. I'll be quarantined until next week around Monday to Tuesday-ish. So I'll still be updating in terms of a different aspect ratio in terms of that. But in terms of the equity chart itself, what you do notice is there's a slight increase again, and similarly, it's purely based on the experimental trade setup. So like what I mentioned, the experimental trade setup is something that captures all the short-term trends. So tentatively, when there's a very nice clear trend in terms for the altcoins, be it for Ethereum, for Link, the SPL will be doing very well in that sense. But in which case, if it doesn't, then you will see that there is also negative periods or drawdown period that went into negative. So it's still not very stable. I'm trying to actually be a little bit more concrete, especially when you're trading on a shorter time frame. The noise tend to be a little bit more. So this is the same, especially when you're looking in terms of sound wave and things like that. On the nature kind of scale, whenever you go on a shorter time frame, you do face a general likelihood of facing more noises, and what noise can actually result is basically can trigger your stop loss unnecessarily, or it can even generate noise potential signal or trigger that could actually be a false kind of setup or a poor setup in that perspective. All right, with that said, in terms of the market structure of this, today is a Saturday, so the weekly market structure on the weekly chart remains relatively the same. You can look on the weekly chart across the US and China market, it remains remains exactly the same. No major change in terms of the market structure and sentiment behind it. However, if you look in terms of the daily chart for S&P 500, you will see that once again, we actually managed to close with a new all-time high, even in the respective of a weekly chart itself. So, but bear in mind that we are really getting a little bit exponential ahead of this 20 exponential moving average, which in my opinion is not a good sign. And even though this is tentatively a bullish candlestick, can be viewed as a bullish candlestick when it's viewed at the bottom of a trend, coming from this as a top of a trend without with only like 3 weeks of consolidation, it could go that we could still go a much parabolic phase, especially we have two indecision candlestick, showing that there was a indifference in terms of the buying and selling momentum remains relatively similar. So that is based on that. So on the other hand, for Nasdaq itself, or more for the tech stock itself, it looks towards more like a consolidation phase or retracement and pullback phase. So in my opinion, Nasdaq looks a little bit more healthy, where S&P 500 could actually be catching up, because in terms of the gains wise, I understand S&P 500 percentage gains wise is definitely less due to the fact that tech stock done extremely well as a result of the pandemic, accelerating the growth of digitalization and digital tools in the past 1 over year. And I do foresee it going to be even more distinct difference in the coming years ahead. But that is, of course, my personal perspective of how the industry or sector will be doing. All right, in the sense of the ASH or China non-tech stocks related, you'll see that we are actually consolidating right below this 20 exponential moving average on the weekly chart. So things looks to be good in my opinion, even though tentatively overall we can see that's rather bearish. But if you look in terms of the high to the lows or to the highs to where we are right now, we're actually almost at 16% down. So to me, I looked at that as a 16% kind of discount. So when it comes to stocks wise, generally between 10 to 40% discount would be a very decent and good discount to have. Above 40 to 60% discount, that would be a really great bargain. I'll definitely be charging in and putting almost as much as I possibly can into the exposure of it. All right. So around this range is something that I'll be keen and interested to add in a little bit here and there whenever I have excess cash coming in here and there. All right. In the case of KWEB, like what I mentioned, it's definitely looking to be bearish, especially if you mentioned you say the more time is spent below that, especially if you look in terms of the weekly chart, we actually finally managed to close below this 50 simple moving average on the weekly chart, which is definitely a bearish sign. So I do see that potential bearish momentum could bring us towards the $66 region. That will be where if support is being established, somewhat like this kind of candlestick followed by a bullish momentum. So I'll probably be rebuying it right over here at $70 mark, but going in only after confirmation has been clear. Yeah, because potentially with such a consolidation phase over this period of time, taking into account from here to here, we actually consolidated for 31 bars over 44 days itself. So with this kind of long consolidation period, we could even potentially break below this $66 to retest this $58 region as well. But of course, this $66 region being a key monthly support a horizontal support could potentially be a very strong holding as well. So let's see how price react to it before we consider entering a long or entering for investment wise. All right, and finally, in terms of Bitcoin itself, things looks to be great actually. We actually have some indecision over here, but most importantly is we found support at this 20 exponential moving average 2 days in a row for the past 2 days. And as you know, Bitcoin even closed on the weekly chart, but let's take a look at the weekly chart and how potentially what we could be seeing itself. So like I mentioned earlier this week, a very nice bullish candlestick itself, and the distance between 20 exponential moving average and the price itself is actually not that far. So let's take into account here to here, we are getting around 18 to 19%. So even if we do drop, I do see a 18 to maybe almost 20% drop-ish. We see a very much kind of support coming in as well. All right, so going back on the daily chart itself, thing looks to be great, especially with price maintaining above this 20 exponential moving average on the daily chart. However, on the 4-hour chart, I still see a little bit of choppy actions over here. You can see that even here is ideally supposed to be maintaining above here, but we're seeing some sort of choppy action stopping me out over here. So right now I'm staying a little bit away from the market in terms of short-term trading of Bitcoin itself, because it looks to be a little bit too choppy for me to take the risk. So even if you could be profitable, the point of the fact is that you're going to get stopped out more times then you could potentially be making profit unless you're looking for a range bound kind of trade, in which case the kind of criteria and setup is very different. And for me, I'm generally a trend following kind of a person so far. I've been trying to explore a little bit more on range bound kind of trading strategies, but let's see how things goes. With that said, I've come to the end of today. You can read in here, or you can pause over here and read it over here because the screen is being chopped off due to the aspect ratio wise. But yeah, basically I'm waiting for clearer price action and consolidation before reconsidering to enter a long based on 200 simple moving average for Bitcoin itself. But of course, in terms of other tokens, be it Ethereum, Link, or even other altcoins you could be trading, then potentially they could have a much clearer kind of a momentum whereby you could enter for a long trade in that perspective. All right, with that said, I've come to the end of today and I'll see you guys tomorrow. Take care. Bye-bye.